Time you earn $100,000 in a year, you'll probably make the same mistake almost everyone makes. You'll start living like the problem is solved. It isn't. It's just changed shape. And the new version is quieter, more expensive, and a lot harder to see. And here's the thing. It's not really about the number. The number is almost irrelevant. What matters is what happens inside someone's head the moment they cross it. Something shifts. Some quiet internal voice that spent years saying, "Not yet, not enough, hold back." That voice goes silent. And when it goes silent, people start making decisions they couldn't afford to make before. Except now, they tell themselves they can. New car, bigger apartment, better restaurant every Friday. Clothes that actually fit the image they've been building in their head for a decade. And none of it feels reckless, because technically, they earned it. They worked for this. The math adds up. Kind of. But here's what's actually happening underneath all of that. The moment your income hits a certain level, you stop calculating what you can afford and start justifying what you want. That's not the same thing. It sounds like the same thing. It feels like the same thing, but it isn't. And the reason almost nobody catches it in real time is because everything around you starts to confirm the upgrade. Your friends notice, your family notices, you move differently, you feel different. The social signal is working. The problem is the financial signal is quietly going the other direction. Most people won't realize that until they're 3 years deep, earning more than they ever imagined, and somehow still living paycheck to month end, confused, a little embarrassed, wondering where it all went. That's what we're actually talking about today. There's a concept in behavioral economics called lifestyle creep. You've probably heard the term. But hearing the term and actually understanding what it does to a person, those are two completely different things, because it doesn't feel like creep. That's the whole problem. It feels like progress. Think about someone who spent their 20s being careful, budgeting, saying no to things, watching other people take vacations they couldn't justify, driving a car they were slightly embarrassed about, wearing it all like a quiet badge of discipline. And then, finally, the income catches up. Finally, the number is real. And what does the brain do with that? It doesn't say now save more aggressively. It says now you're allowed. It says you've been waiting long enough. It says this is what the hard work was for. And that voice is not irrational. That's the part people miss. It's actually a completely logical response to years of delayed gratification. The brain kept score. It remembers every time you said no, every Friday you didn't go out, everything you talked yourself out of. And now it wants to settle the debt. Psychologists call this self-licensing. The idea that doing something good, being disciplined, working hard, sacrificing, gives you unconscious permission to ease up afterward. Like you've earned the right to be a little less careful. And at $100,000 a year, the self-licensing kicks in hard. Because the story you tell yourself is finally backed by a number that sounds real. Here's the uncomfortable part though. The people who struggle most at this income level aren't the ones who were irresponsible before. They're usually the ones who were the most disciplined. Because discipline without a clear next direction, it doesn't just pause, it reverses. All that stored up restraint has to go somewhere, and it usually goes into the lifestyle. There's something else happening too, at the same time, something social. Because $100,000 doesn't just change how you see yourself. It changes which rooms you start walking into, which conversations you're part of, which people you're around, and those people have different baselines. The friend group shifts, slowly, naturally, toward people at a similar income level. And suddenly the invisible comparison point moves. What felt like luxury 2 years ago feels normal now. What felt like splurging feels like keeping up. The reference frame just quietly upgraded itself, without anyone asking your permission. Economists call this the hedonic treadmill, the idea that humans adapt to improvements in their circumstances faster than they expect to. You get the raise. You feel great for a while. Then that becomes the new floor. And the next thing starts to look like the thing you need. The treadmill doesn't feel like a treadmill while you're on it. It just feels like living your life. And here's what that does financially, in real terms, not theory, not psychology jargon, just what actually happens. The income went up, significantly. But the gap between income and expenses, that gap, the only number that actually builds wealth, that gap either stayed the same or got smaller, sometimes much smaller. Because the expenses scaled right alongside the income, sometimes slightly faster, and people don't notice it happening. because every single upgrade felt reasonable in the moment, justifiable, earned, and individually, maybe each one was. But the compounding effect of 20 reasonable decisions, that's where it gets expensive. Let's talk about what actually changes at $100,000 a year, not emotionally, mechanically, because there are real structural shifts that happen at this income level that most people are completely unprepared for. The first one is taxes. And I don't mean that in a boring, obvious way. I mean most people, even smart, educated people, genuinely don't understand what happens to their effective tax burden as income climbs. They hear 100K and they think about the gross number, the number on the offer letter, the number they tell people at dinner. They don't think about what actually lands in their account. Depending on where you live, between federal tax, state or local tax, social contributions, and whatever else gets pulled before you ever see it, you might be taking home 65, maybe 68 cents of every dollar you earn, sometimes less. The number people celebrate is not the number they actually have. And here's where it gets quietly dangerous. The lifestyle upgrades happen at the gross number. The spending decisions get made based on what people think they earn. But the actual cash available, that's the net. And the gap between those two numbers widens as income increases. Most people don't do that math carefully. They feel wealthy at 100K. They might not be. The second shift, and this one's more subtle, is that at this income level, you cross into a range where the government stops helping you as much. A lot of tax credits, deductions, assistance programs, savings incentives, they phase out at higher incomes, quietly, without anyone sending you a letter. You just stop qualifying. The safety nets that existed at lower income levels start to disappear, and the expectation, implicit, never stated, is that you're now earning enough to build your own. Except nobody taught you how to do that. The school system didn't cover it. Your first job didn't cover it. And most financial advice online is either too basic or trying to sell you something. So you're in this strange middle place, earning real money, losing some structural support, and expected to figure out the rest yourself. Most people respond to that by just not thinking about it, which is its own kind of decision. The third thing, and this might be the one that matters most, is that $100,000 is the income level where the difference between people who build wealth and people who don't starts to become permanent. Not because of what they earn, because of what they do with the margin. There's a window that opens at this income level, a real one, where, for the first time, there's enough slack in the finances to actually move money somewhere meaningful, to invest consistently, to build something. The math is finally there. The raw material exists. But that window doesn't stay open forever, because lifestyle has a way of expanding to fill available space. And once the expenses catch up to the income, once the car payment and the rent and the subscriptions and the dinners and the weekend trips all normalize at this level, the window quietly closes. Not dramatically, just closes. And the person is now earning $100,000 a year and living $100,000 a year life. Which sounds fine, except they're not building anything. They're just maintaining, month after month, year after year, earning more than most people they grew up with, and somehow not getting ahead. That feeling, that specific confusion. That's one of the most common financial experiences of people in their 30s and 40s who by every external measure should feel secure. They don't feel secure. They feel like they're running. And the reason, the actual mechanical reason, is that they never consciously decided what to do with the margin before the margin disappeared. They didn't lose it. They just spent it, gradually, reasonably, on 100 things that each made sense on their own. Here's the thing about wealth that almost nobody says clearly enough. It doesn't come from earning more. It comes from the difference between what you earn and what you spend, multiplied by time. That's the whole equation. It's almost insultingly simple. And yet, the number of people at $100,000 a year who are genuinely building towards something versus the number just maintaining a lifestyle, the gap between those two groups is wider than most people would expect. Because maintaining a lifestyle is easy. It happens automatically. Building something requires a decision, a specific, uncomfortable, ongoing decision to not let the expenses catch up. And most people never quite make that decision. Not because they're irresponsible, because nobody framed it as a decision in the first place. So let's talk about the people who actually get it right at this level, because they exist. And the difference between them and everyone else isn't income. It isn't discipline in the way most people think about discipline. It isn't some superhuman ability to say no to things, it's something quieter than that. The people who build real wealth at $100,000 a year and beyond, they make one decision early, one foundational decision that everything else sits on top of. And the decision is this: they choose consciously to let their lifestyle lag behind their income, on purpose, deliberately, not forever, not as punishment, just as a policy. The income goes up, the lifestyle moves slower. The gap between those two lines, that gap is where everything gets built. It sounds simple, and it is simple, but simple is not the same as easy, because every social signal around you is pushing in the opposite direction. Every ad, every peer, every cultural message about what success looks like, it all says upgrade. It all says you've earned it. It all says the point of making more money is to spend more money. And resisting that isn't just a financial choice, it's a psychological one. It requires a very clear internal picture of what you're actually building toward, because without that picture, delayed gratification has no target. It's just deprivation, and nobody sustains deprivation long term. That's the part the financial advice industry gets wrong, by the way. They talk about cutting expenses like it's a discipline problem, like the solution is just trying harder, wanting less, being more frugal. But that framing puts all the pressure on restraint. And restraint without direction exhausts itself. The people who actually do this well, they're not restraining themselves, they're redirecting. There's a destination. There's something the money is moving toward. And that changes the psychology completely. It stops feeling like sacrifice and starts feeling like construction. Now here's where it gets real. Because I want you to think about something for a second, not as a financial exercise, as an honest, personal question. If your income doubled tomorrow, right now, today, what would actually change in your life 6 months from now? Be honest, not what you'd want to happen. What would actually happen? Most people, if they're being truthful, the answer is the apartment gets better, the car gets better, the wardrobe gets better, the restaurants get slightly more expensive, the vacations get slightly longer, and the savings rate stays roughly the same. Maybe goes up a little, but not proportionally, not even close to proportionally. Because that's what the data shows, across income levels, across countries, across demographics. As income rises, spending rises at almost the same rate, sometimes faster. The savings rate barely moves. The wealth building barely accelerates. And this is happening to people who consider themselves financially responsible, people who have budgets, people who have savings accounts, people who would tell you, genuinely, that they're being smart with money. They're not being reckless. They're just being human, doing what humans naturally do when the resources increase, expanding to fill the space. Here's the emotional truth underneath all of this. And this is the part that doesn't get said enough. A lot of the spending that happens at $100,000 a year isn't really about the things being purchased. It's about identity. It's about finally feeling like the person you always thought you'd become once the money was there. The car isn't just transportation. The apartment isn't just shelter. The clothes aren't just clothes. They're evidence, proof, to yourself and to everyone watching, that you made it. And there's nothing wrong with that feeling. It's deeply human. The need to signal status, to feel arrived, to wear the success externally. That's not weakness. That's just how people work. But it's worth understanding it for what it is. Because when you see it clearly, when you recognize that a purchase is really about identity and not utility, you get to make a more conscious choice. You can still make it, but you're making it with your eyes open. The most financially dangerous version of $100,000 a year is when someone gets there and spends the next decade performing success instead of building it. Looking wealthy and becoming wealthy, those are not the same path. Sometimes they're opposite paths, and the gap between how someone's finances look from the outside versus what's actually happening on the inside. At this income level, that gap can be enormous. A nice car on a lease, an apartment that costs too much, a wardrobe built on a credit card, a savings account that looks respectable until you notice it hasn't really grown in 2 years. Everything signals success. Nothing is compounding. And here's the line that I want to sit with for a second, because I think it's the most important thing in all of this. Wealth is not what you earn. It's not what you spend. It's not what you own. Wealth is what you keep growing silently while you live your life. It doesn't show. It doesn't signal. Nobody at the dinner table knows about it. It doesn't make you look successful. It just builds, quietly, underneath everything. And the people who understand that really understand it, not just intellectually, but in how they actually make decisions. They behave differently at $100,000 a year, not more miserably, not more restrictively, just differently, with a clarity that most people at that income level don't have yet, because they stopped trying to look like they were winning and started actually playing to win. So where does that leave you? Not as a concept, not as a financial theory. Practically, right now, where does it leave you? Because here's what I've noticed about conversations like this one. People listen, they nod along, they feel something shift slightly in how they're thinking, and then they close the video, go back to their day, and nothing changes. Not because they didn't understand it, because understanding something and doing something with it are separated by a distance that most people never quite cross. And I'm not saying that to be harsh. I'm saying it because it's the most honest thing I can tell you. The information isn't the hard part. It never was. You probably knew most of this already. Somewhere in the back of your mind, in that quiet place where things you don't want to look at directly tend to live. The concept of lifestyle creep isn't new. The math isn't complicated. The logic isn't difficult to follow. What's difficult is sitting with the gap between where you are and where you could be. That gap has a feeling to it, a specific uncomfortable feeling. And most people, naturally, reasonably, try to close that feeling as fast as possible, either by fixing the problem or by stopping thinking about it. Most people stop thinking about it, and I get it. Because the alternative requires something that's genuinely hard. It requires looking at your actual numbers, not the rough sense of your numbers, the actual ones. It requires asking, honestly, without softening it, whether the life you're building financially matches the life you say you want, whether the money is moving towards something real or just maintaining something comfortable. That's not a fun question. It doesn't feel good to ask, but it's the only question that actually matters at this income level. Because $100,000 a year, or wherever you are right now, it's not a destination. It was never the destination. It's a tool, it's material, it's raw potential sitting in your account every month, waiting to become something. And what it becomes depends entirely on the decisions you make before the lifestyle catches up and absorbs it. The window is open right now. For some people watching this, it's been open for a while. For others, it just cracked open recently. Either way, it's there. And the only real question is whether you're going to use it deliberately, or let it close the same way it closes for most people. Gradually, quietly, reasonably, one upgrade at a time. There's something else worth saying before this ends, something that doesn't get included in most financial content because it's not actionable enough, not specific enough, doesn't come with a 5-step framework. But I think it's true, and I think you'll know it's true when you hear it. The people who build real financial security, not the performance of it, the actual thing, they almost always describe a moment. A specific moment where something clicked, where they stopped relating to money as a reward for hard work and started relating to it as a resource to be deployed, strategically, intentionally, with a destination in mind. That moment looks different for everyone. For some people, it's a conversation. For some, it's a number they saw that scared them. For some, it's watching someone older than them realize too late that the window closed years ago and they never noticed. But it's always a moment of clarity. Not motivation, not inspiration, just clarity. Maybe this is yours. Maybe it isn't. I can't know that. What I do know is that most people will hear everything said in this video and still miss it. Not because they're not smart enough, because they'll process it intellectually and let the feeling fade before it becomes a decision. But a few people will understand exactly what to do next. Not because I told them, because something in here confirmed something they already knew. And this time, they're not going to let it go quiet again. If you want to keep thinking about this, about how money actually works at the level most financial content never reaches, there's more here. New videos, same approach, no performance, no shortcuts. Just the stuff that actually matters, said the way it actually is. And if that's what you're looking for, you know where to find it.